Again, what is the ultimate goal? Now you might be asking, okay, you told me what do you mean by receivables management, you told me what is this credit period, you told me what is this credit policy, you told me what are the collection period. All these things are fine, but for what? What is this credit policy? The main agenda. The main agenda is, by giving credit, the company's sales is expected to increase. When the sales increases, there is a high probability that the profits will increase. When the profits increases, the shareholder will get more benefit. So the ultimate answer is maximizing shareholders' wealth. That is the agenda, or that is the goal. This is what I told you. There is another issue in it. What is the issue? This increased sales is associated with increased cost. You know this very clearly. When you have one branch in a location, you are happy because you yourself can manage. But when you are expanding your company, which means you are right now operating in Tamil Nadu, you want to expand into Toronto in Canada. When you want to do, you cannot employ yourself in two locations. You have to employ one person in Toronto. For that you have to pay salary, you have to hire one office, you have to pay the electricity bill, whatever charges they have. All these things are incremental cost. So please understand, don't dream that your business will grow and give you profits. Yes, that will happen, but that is also associated with increased cost. So you should be very clear before taking a decision that there is something called trade-offs. If you want to increase your sales, you should be ready to increase your cost. You cannot get increased sales without cost. This, for example, my teacher used to tell us one small joke, which means I studied in an ordinary government college, but I am very happy about it. But what he says is, at that point teachers were not paid well. So he used to create a joke. The joke is, when you pay peanuts, you will get only monkeys. What does that mean? Is you are giving only small rupees to people. So only monkeys will come and do the job. But when you pay them royally, pay means it is not big pay, a right pay. You will get the best people in the industry. This is example for your organization also. When you want to get the best talent, you cannot compromise on salary. This is what I told you. When you get the best talent, what will happen? Your sales is expected to increase. This is what is happening in the biggest company in software industry called Infosys. Right now the CEO is Vishal Sikka. You know his salary. It's tremendous. Why are they giving him this much salary? Why can't they employ an ordinary person? The reason is Vishal Sikka will turn this company out. That is a dream. They all know it. They are all expecting it. So when Vishal Sikka is there, they are expecting their sales will increase. That is why they are ready to pay him higher salary or higher cost. So starting from our small example to the biggest Vishal Sikka, this is true that increased sales is always associated with increased cost. So as a businessman, you have to take a clear distinction whether you are ready for it or not. Now, certain things beyond this. Yes, this is a risky game. You have to pay higher, you have to increase cost. But then why are you going for this credit policy? The answers are these. First one, this is the best marketing tool. When you say goods available on credit, customers will flow like bees flowing into a flower pot. You have seen these honeybees or butterflies in butterfly garden. I'm sure when you go to Ooty, there is a place called Botanical Garden. You can see lovely flowers, and lovely flowers attract butterflies or even this bees and all these things. So what is it mentioning? When there is a huge publicity about your company, customers will flow. And what is this huge publicity? It is all about credit policy. See, even right now, so-called educated class, when you walk in a shopping mall, you see one big poster, buy 2 get 4 free. tell me honestly, will you not enter that shop? Don't lie. You will enter that shop. Why? It is that motivation. When you buy 2 things, you are getting 4 things free. So, finance professor will say, you are investing for 2 and getting out 6. 4 plus 2. So, you are making lot of products with low cost. The decision you have to take is whether it is good, what is the quality, what is the brand, which is right, all these things. So from a company point of view, that poster will attract everyone. That is what I am also referring to. If you have got a very sweet credit policy, very teasing credit policy, which can attract customers, that is the best marketing tool. Next, maximization of sales. Just now I told you the same example. Buy 2 get 4 free. The first day I go and buy a shirt or buy that product. The next day I come to you and I am advertising this. The company is not advertising. I am telling to you, see, I bought 2 shirts, I got 4 shirts free. That day evening you will also go. Then again you will tell your friend, he will also go. This is all resulting in maximum sales. So that one poster is creating sales maximization. But there is a cost. Why? If the company has not given this offer, for 2 shirts they will be making that profit alone. Right now, from that 2 shirts they are spending 4 shirts. So their incremental profit is not that much. But their sales is very high. This is exactly what you call it as turnover. There are certain companies in India which have very high turnover but very less profit. All this boils down to our theory called working capital management. So, sales do not expand without cost. There is a very clean association. When you want to increase sales, you have to spend money. Therefore, what you should do in business is, when you are investing extra, you should look whether that extra investment is giving you benefit. See, I am sure when you listen to these videos, you will also be looking. See, I am listening to this video for past 40 minutes. That much time you are spending. Is that 40 minutes worth? That is a question mark. If that is worth, then it is a big success. If not, then that is not a success. So in business also it is the same plan of action which is working out. There are 3 types of cost inside this for any business, for your information. That one is called product and selling cost, second one is called administration cost, and third one is called bad debt cost. All these terms I am sure you know this. But product and selling cost, example of sales promotion, marketing, advertising, poster business, selling online ads, all these things are selling cost. Administration cost, hiring employees, asking them to distribute posters, electricity bill, your wages, your promotional expenditures, all these fancy advertisements, the cost for it, the administration part. Your legal applications, you have to file certain returns to the government, all these things are administration. Bad debt is the outcome. That is, you have sold your product but you have not got the money. You are expecting to get it, but after some period you understood that you can't recover it. There are, for your information, you know this, there are lots of banks in India which have given money to the biggest airline called Kingfisher Airlines. They are all in the same issue called bad debts. Why? Kingfisher Airlines says they don't have money to repay, but bank says they have given that much money to these companies. So from where they will get that money? This is exactly bad debts. So it is a very tricky situation when you end up in bad debts. So all the 3 costs, you have to be very clear. You have to decide before taking a decision. What is the decision? Whether these 3 costs increase is greater than your increased profits. If the answer is yes, do not take up that business. If the answer is no, then go for that business. That is the decision. Then, As a result, what I told you just now, an evaluation of firm's credit policy is very important. All these issues are very, very tricky. Therefore, before taking any decision, you have to evaluate the first information, that is, what is the loss by not taking this business? In other words, it is called opportunity cost of lost contribution. I repeat, before taking a business decision, you should think what is the loss for you by not taking this business. Just for your curiosity, for example, you go to a hotel or you are planning to go to a hotel. There are two choices. One, there is a 5-star hotel in front of you. On the other side, there is a small hotel. Either is you are the same person, you have the same hunger. The only choices are, one is a big posh hotel called, for example, Taj. Another is a small hotel called Paradise. Whether you want to sit in the Paradise and watch Taj, or whether you want to sit in the Taj and enjoy Paradise, that is a question. Each has its own issues. If you go to a Taj, you will be given coffee in a silver cup, but the coffee cost 400 rupees. If you go to this Paradise hotel, you will be given coffee in a glass, but the coffee cost 10 rupees. What do you want? That is the question. Here, if you are going to Taj, you are evaluating the opportunity lost, which means if you are going to Taj, you would be thinking, had I gone to Paradise, I would have saved 390 rupees. Why? 400 rupees is the coffee. If you have gone to Paradise, you need to pay only 10 rupees, which means you are paying 390 rupees more in Taj hotel. Similarly, if you go to Paradise, you will be thinking, if I had gone to Taj, I could have drank this same coffee in a silver cup with stylish people. There you will not look at cost, you will look at benefits. So here the decision is that benefits higher than 390 rupees? If yes, go to Taj. If these benefits are not higher than 390 rupees, don't go to Taj. This is common man's example. But when you are entering up in a business, this is more crucial. What is a more crucial thing? You should be taking a very clean agenda. That is, what is the loss you are going to end up by not taking this business? Or what is the loss you are going to face by not giving credit? So if you are giving credit, your sales will increase. So the question is, what if I am not giving credit? That you have to answer. Second is the credit administration cost and the bad debt cost. So the first one is yes or no. Second one is, if it is yes, that is if you are giving credit, what are these costs? Administration, bad debt losses. If your first question or the first point is higher than the second point, then your decision is positive, which means you are getting more benefits than cost. If your first decision is negative or lesser than the second one, then it is a loss, which means your benefit is lesser than the cost. So the ultimate answer is, you will be taking two things parallelly and you will be weighing it, which is better and why. Then only you will take up the final call. The beauty is, both are opposite. It is not parallel. This is not railway track. This will always go, one is from top to bottom, another is from bottom to top. So there will be one intersection or one meeting point. That is the exact point which you should locate. It is different for each business, each activity, each location. So as business managers, as future leaders, this is where you should focus on.